Hey y'all, hope all is well. Day 3, back at it. So this is where price is today. Our low, our high. This is where the market is currently at that price. I'm predicting the price is going to drop. And the reason why I say that is because price hit an all-time high yesterday in a while. And sometimes we call it a higher high. And the reason why I call it a higher high is because yesterday it hit that, which was a high. Now today it hit that, which was a higher high. When it's using that term, made a higher high, is because that was a high. It made a new higher high. Now this is a higher low because that one didn't open up. That candle did not open up above that. It opened below it. So that's a new higher low. Then you will hear the terms of lower low and lower high. So now I'm going to set my new support right here. And the reason why I'm setting it here, because this is where price hit most frequently in the past couple weeks. We have right here where it hit on November 22nd. We have right here. And do you see how when you hit certain areas on the mark, it lets you know the day and time they hit that area? So November the 17th, it hit that area too. Yesterday it hit that area. So now this is my new support. And as you can see, these past couple of hours, price tried to break it lower, but it didn't because it brought up. So now I'm gonna make my resistance here, because this is where price hit today, where it made a new high. Where I call this a new high because you will hear the terms of higher high, higher low, lower low, lower high. So this was a high yesterday. This is the high that it hit in a long time. If you see here, it hit that kind of area then. So this made a higher high because it was higher than those. So it went up. Now today it made a new higher high because it hit a new area that was higher than the previous. So now we got a new lower high because it's still higher, but it's lower than previous. So by this candle opening up below that wick, and this is what we call wicks. So you got the candle body, which is here, and these are the wicks. So since this wick reached here, that's going to be my resistance. Now, if this candle was to engulf, or even if it don't, if it was to go up and break here, then we know it's a potential that it will buy up. Now, if it come down, then we know it's going to sell. Now, if it come all the way down to here and it break, then it might sell more. If it not, it could come down here and retrace. Retrace is another term I want you to get used to, because the market retraces itself so much throughout the day. So it could retrace and then come back up. So your support and resistance are tools that you can use to help you know if the market going to break up or break down or do what it want to do. That's basically what it do. You just have to be cautious when trading, because the market, you can predict, and you might be predicting right, but the market might not be ready to hit that area yet. You got to look at the Feds run this. So when the Feds bring news like they did today, I didn't see a big impact, but I believe it's going to sell. The Feds play a big part in the market, and you will learn that as you start trading, as you start studying. Please do not be discouraged, because I was, but once you get the hang of it, you're going to love it, because you can make that money. Now, so since I'm predicting price to sell, this is going to be all the area here that we can make money. Even if it buy up, we can. So this is where I go back to sitting patiently. So I'm trading on the 4 hour. So on the 4 hour, this is the 9 o'clock candle. On the 4 hours, you get a 1 p.m. candle. So this, I'm sorry, let me retract myself. So let's say we starting the day today. The first candle will open up today for today will be 1 a.m. Then they come at 5 a.m. a new candle, 9 a.m. a new candle, 1 p.m. a new candle, 4 p.m. It's kind of like when the market begins to close. So when the market begins to close, it closed from the time between 4 and 5. A new candle opened up 6. Then you have a new candle at 9, and just repeat itself. They're called different sessions, like London session, New York session. I have to really memorize what the sessions are because I really don't know. I trade all day. So most of the time we get that big rush is between, I would say it varies from 5 a.m. in the morning to like 9 a.m. in the morning. That's when I trade a lot. I want y'all to be able to trade. I don't want y'all trading all day. This is going to be our part-time job. So you find a time in your schedule that works better for you where you can sit and pay attention to the market and it won't interfere with anything else you're doing. Because when I want y'all trading, I want y'all to be focused on it, not distracted, or learn how to use your SLs and your take profit things. Then you won't have to sit there and monitor, because you know price is going to hit here, so I'm gonna take my profit. I'm gonna use my stop loss just in case I can't use my stop loss just in case it doesn't go in my favor this time. I want to be prepared not to lose. And I just want to reiterate, you don't want to lose 10% of your balance. What your balance is whatever you deposit or whatever you're playing with. So that's another thing. Risk management is something I want to get into because that goes along with trading. Your risk management. Thank you.